with the Fed deciding to keep jacking up the interest rates, unfortunately, this does mean problems for stocks and the crypto market. Now, even though I do believe that the next bull market in crypto will be the biggest one yet, and we will see new all-time highs, in the short term, I do think it's now more likely that we'll be getting new lows in stocks and crypto. And so in this video, hot off the press, following the latest FOMC meeting, we'll be looking at the Fed's dilemma, why Jerome Powell is trapped between a rock and a hard place, some price predictions of where I think the bottom will be for crypto, and then we'll finish up with my plan on how I plan to navigate this storm. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up with Jerome Powell continuing his hawkish stance, raising interest rates another 75 bips. To understand what comes next, we need to fully understand the Fed's dilemma. So let us begin with the Fed's dilemma. And here we have Jerome Powell heading up the central bank. And the first point is that the two main tools in the Fed's toolkit are they can raise and lower interest rates, meaning how much it costs to borrow money, and they can put money in or take money out of the economy, quantitative easing or quantitative tightening. And here is the dilemma. So the two things that are bearing down on Jerome Powell's mind at any one time is inflation and the performance primarily of the stock market. And that the dilemma is the policy used to correct inflation is the opposite of what works with the financial markets. So at any one time, he is thinking, what is the bigger problem? And right now, he's saying it's inflation. So obviously, inflation's problem is quite obvious. If everything's going up by about 10% per year, this really hurts every single family in America. Now, you may be thinking, well, what's the problem with the stock market going down? Well, the problem is that most of the money in the stock market is with the baby boomers, and they have been paying into the stock market via retirement funds for decades. And this is the money that they're going to be using to retire. So you cannot have a collapse in the stock market, as people's entire life savings will be lost. Now, the stock market goes down 10%, 20% very, very often, so that's not really a big problem. So the big problem right now for the central bank is inflation, and their target is that inflation should be around 2%, but it's currently coming up to about 10%. So inflation is the bigger problem, and this means they have to raise interest rates and pull liquidity out of the market. And hot off the press, just yesterday, interest rates have gone up another 75 bips. And why is this bad news for stocks? Well, one of the ways to grow a business is that they will borrow money and reinvest it into the business. With money, they can hire more employees, they have money for marketing, and several other strategies for growing business. So if the cost of borrowing goes up, they can no longer do that, and it will hurt the businesses. Also, any business that has borrowed a lot of money, and that is a lot of people right now, when it comes to refinancing, the monthly payments are a lot more expensive. And this is why raising interest rates is bad for the market, which means there's probably going to be another leg down in stocks, which means crypto is going to get hit hard. And that essentially is the Fed's dilemma. Now, the question is, how low can crypto fall? Well, there's two key price targets that I'll be personally looking at, and we'll be basing this off Bitcoin's price, as Bitcoin still leads the crypto market. And this is where we're at right now, currently battling around this 20 to 23 mark. But for me, the next big leg down, which has been covered, is this line here, which is around the $12,000 mark. And this is simply because there is a lot of support around this level. So you can see it's hit this level multiple times in the past, which means it's a very key level of support. And then the other price target that I'll be personally looking at, which I would say is probably a worst case scenario, we're going to have to zoom in. And this is the last crypto winter that happened in 2017. So as you can see, this one came down, and it bottomed out after about a year. And the bottom price was around $3,000 for Bitcoin. So quite simply, the top was around 20K, and the top this time got to over 60. So that's 3 times the size. So if we look at the bottom and we take 3 and we do 3 times the size, 3, 6, I'm thinking the bottom is going to be around the 9,000 mark. And I, for one, will certainly be putting a big buy-in sub 10. And I think if it went down to 3,000 last time, it's certainly feasible, especially with everything going on right now, that we could bottom below 10,000. So this can be a pretty scary time for investors as we see our portfolios getting hammered. So how do I personally plan on navigating this storm? Well, here we are again. This is Bitcoin's price. This time I've included the buys that I've done in 2022. So this was the all-time high. You can see after this first big crash down, the narrative was that Bitcoin will be going past 100,000. I was a believer and put my first buy in here. There was another sharp drop. I did another buy. This one, looking back now, was an excellent buy as well. I did get a bit of FOMO here, thinking it's going to come back. And I definitely thought once it hit 40,000, it wouldn't be going to 20. I was wrong. Another big flash crash. And I'm very proud of this buy here. Almost caught the complete bottom. And after a bit of sideways trading, there was another flash crash. My last buy was about 23,000 for Bitcoin, and been riding it out ever since. So for me personally, my next buy, I'd be looking for this sub 15. So if I can buy at 13, 14, I'll be very proud of that buy. And then my final buy will be this sub 10. And I think any buys where Bitcoin is below 10,000 will be an absolute buy of the decade. Now, one final thing to point out, and it's for all the people who are criticizing these buys here, that they're relatively high, between 40 and 50,000. I just want to show you the big picture. And the big picture will be this. Let's just go back to the last big blow off top and crypto winter, and I'll show you what I mean. So the equivalent would be we had these big drop-offs and we were buying about here, yet it still went further down, and you may have bought here and it still went down, and you may have bought here and then it still went down. So people are saying, oh, look, you made these terrible buys. But the main point is this: just fast forward 1 to 2 years and all of a sudden these buys here, you're going to wish you had bought more. Now, these buys down here look exceptionally good, and I think that's what's going to happen again. So these buys that are made around here, once we fast forward a couple of years, this is going to shrink right down, and you're going to wish you'd bought more at 40,000. And this is why I'm personally very proud of my 30,000 buy, my 20,000 buy, and I actually really want one final drawdown, as these are going to be the buys of the decade. Obviously not financial advice, this is just how I see the market and how I will be investing in crypto over the coming months. So, unfortunately, due to economic conditions, I do think we're going to be heading deeper into winter, as it does take time for these interest rate hikes to work their way through the system. And so what this means is that it's probably more likely to be getting bigger crashes and new lows in stocks and crypto. And until inflation is fully under control, or the stock market becomes the bigger problem and may be crashing down further than 30%, 40%, 50% from its all-time high, I don't see a reversal in Fed policy anytime soon. Now, the big benefit for those that can stomach it is that assets will continue to be put on even bigger sales. And I, for one, will be adding to my crypto stack over the coming weeks and months. Personally targeting a Bitcoin price sub 15,000 and then sub 10,000, although I will be buying the large cap altcoins. So there you are, guys. Hope you enjoyed. Now, moving forward, be really careful who you're paying attention to. I personally like the big billionaires like Brian Armstrong of Coinbase. In a down market, it's important to not let scarcity and fear cloud our thinking, a natural part of human psychology. Down markets are actually where the biggest opportunities arise, if we can zoom out and think long term. And CZ of Binance. The skeptics today will say, oh, you are so lucky to get into Bitcoin so early, a few years from now. Save this tweet, not financial advice. And for now, just to say, if you did enjoy anything in the video, drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.